specifically want to go over today? Daniel, Debbie, and me. Do you guys have any questions today? What are you struggling with? Or do you want to do some practice problems, or what would you like to do? Oh, Daniel, that's right. You got that cool helicopter picture.
Yeah. I had struggled a little bit on the quiz with, I think it was retained earnings.
All right.
If we could go over that.
Are you talking about the chapter 2 quiz?
Yes.
All right, let's take a look at that. I'm gonna look at what you've got there and see. I'm gonna bring up your chapter 2 quiz, if that's okay with you.
Oh, yeah, that's no problem.
All right, let's take a look. It looks like you did pretty well. Let's see. So I'm going to share the screen. You actually got this one right, but I want to do a check-in with you. Is this what you're talking about? Question 3?
Actually, no, I don't think it was that one.
Did you miss it?
I must not have.
You didn't have a lot of errors. I can go. You might have done a previous quiz. Let's look at your previous quiz. And let's go to the top. You're scoring pretty well on these. Ending stockholders' equity. But there's a theme in these questions. Here's one. How about that?
Yeah, maybe I got it wrong and then I figured out my mistake.
Okay.
'Cause I
Well,
think
that's okay. I'm trying to think if we can set it up and I'm gonna move things over a little bit. Okay. So we're gonna do on September 1st. So let's just I like to do everything as rows of, and each row represents kind of a point in time. Okay. So on
Mhm.
September 1st, Baxter reported retained earnings. We'll just say retained earnings. Can you guys see the Excel file?
Yeah.
Okay. I'm just going to I'm just spell it out. Of 136,000. Okay, we have that. All right. So that's the beginning of the month. You know, it can either be beginning of the year or beginning of the month. All right. All right. And now we've got during the month. I'm going to write another row here and I'm going to say during. During the month, Baxter generated revenues of 20, expenses of 12, purchased equipment for 5, and paid dividends for 6. I think we did this problem last week, but anyway, it looks familiar to me, but that's okay. So you may not remember this from memory, but what are the elements in the retained earnings statement? There's four line items. Do you remember what they are?
I think it's retained earnings, income, and dividends, but I don't remember what the fourth is.
So it's beginning balance of retained earnings plus net income or minus net loss. And then what do we do with dividends? Do we add them or subtract them?
Subtract, I believe.
Good, because we're pulling money out. And then you add that up and you get ending balance, okay? So let's say you had 50,000 here, you had net income of 4,000, you had dividends of 1,500. Your I have trouble reading numbers without commas. I don't know why, but I do. Okay. All right. So we're going to say plus 50,000 plus 4,000 and then minus 1,500. So ending balance is a function of net income minus dividends. Okay. But they're not giving you this information in that format. They're telling you revenue is 20,000. Expenses are 12,000. Okay. All right. And they're telling you dividends. Okay. So net income is what? How do we calculate net income, Daniel?
Is it revenue minus expenses?
Mm-hmm. So just like in our personal life, how much money did we bring in minus how much money we paid out? So net income is 8,000. Okay. And then we have been told dividends is 6,000. So during the year, we had 8,000 in revenue. I'm sorry, in net income. And also during the year, I'm going to put two line items here. We paid out 6,000 in dividends. Okay. So there's your net income line and there's your dividends line. Okay. Now you have extra information here. We purchased equipment for 5,000. What do we do with that information?
Would we ignore it since it's not part of income, or
Right,
would
we
we
would
subtract it
ignore
as
it.
well?
It's not a revenue, it's not an expense. When we buy a piece of equipment, what account category is equipment?
Asset.
Yeah, and if we paid cash for it, that's also an asset. So no revenue and expense accounts were involved, so we ignore it. It's
Okay.
just put in there to make, they're just testing you to see, do you understand your accounts? So our ending balance is going to be 136 plus 8 minus 6,000 is 138. Okay.
Okay.
So how'd you get the 8,000 credit? Was that a guess?
I'm not sure. I'm going to assume it was probably a guess.
Okay. I'm trying to think, was it 15 minus 6? No, that's not 8,000. Okay. 8
Or
minus,
I could have misclicked because I do it on a laptop.
you know what I tell students, if you want to major in business, you should go get yourself a small mouse that you can use with your laptop. I cannot do any kind of numbers without a mouse because I'm always moving around my screen and to have to use, I can use the trackpad, but it's really awkward. But with a
Yeah, that's
mouse,
probably a good idea.
and you just put that little I don't know, you got to have a USB port, I guess. Do you have a
Yeah,
USB port?
yeah, mine has one USB port.
Yeah, and then just get a small mouse because you don't want to be hauling it everywhere. You just want to throw it in your backpack, but it makes it so much easier to use a laptop. Although my kids don't. So what can I say? All right. So there will be these kinds of questions on the exam and on the practice exam. So it's really testing you to see, do you understand? Let me bring this up. Do you understand assets, liabilities, stockholders' equity? Do you understand when things go up, when things go down, what's impacted? Do you understand what is retained earnings and how net income impacts that? And so it's similar, but now we're just dealing with retained earnings. Okay. So how about the journal entries? How are you guys on journal entries?
Those are the where we have the date, the account titles and descriptions, the debits and credits.
Correct.
Okay. I think I did all right on those on the homework last night. I was confused on them at first, but then
Mhm.
figured it out again.
Yeah. For this chapter, let's see if I can do this. It's the first exam is not easy because you're learning journal entries for the first time. But when you get to the end of the quarter, you're going to say, wow, that was easy. But it's not. Learning journal entries, unless you've had experience in accounting, it's pretty weird stuff, I think. Okay, so I launched the textbook here. I just, you know how to do that. You just click on Wiley Course Resources. So let's go look at chapter 3, because it's really, I think it's pretty helpful. We'll go to the table of contents, and then we'll go chapter 3, and I'm going to go to the trial balance. Okay. And what I like is they do a lot of practice problems. So, and then the nice thing is they have the solution down below, which I love. And let's see, I think I jumped over it. Let's see if I have it. Here we go, right here. So in my PowerPoint, lost it. Sorry to be making you dizzy. Hang on. Okay, here we go. It's illustration 3-33 in Wiley Plus, chapter 3. So in my PowerPoints, I go over 13 separate journal entries, and you need to know all of those. And they're not going to be identical to what's on the exam. There might be variations. One of the journal entries is prepaid rent. Another one that it could be would be prepaid insurance, you know, or we buy, we have a telephone bill. So that would be debit, utilities expense, credit accounts payable. Might be a different bill, like a parking fee bill, and that would be parking expenses, debit, and accounts payable credit. Okay, so these are the basic entries here. I have one more in mind. I think this is 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now I have 13, so I have more variations. But this is a good place to start. So really knowing the normal balances of account. If I say to you, cash went up, I want you to know that was a debit. If I said cash was paid, I want you to know that's a credit. And I want that for all of these accounts. And it's not a lot of accounts for this first exam. If I can bring this up. Let me just bring this up real quick. I don't have a summary page in this PowerPoint, but it's and there's also the worksheet in the PowerPoint and in your chapter book. So that's just to help you understand how to do transactions. But what I'm looking for is that, and this is not a lot of accounts, that you will know that these accounts are assets, and you will know how to build a journal entry with these. If I say, we made a sale on credit, that you would know you debit accounts receivable, credit service revenue. If I say we made a sale and the customer paid in cash, that would be debit cash, credit service revenue. Okay. And then there's lots of expenses here, and there could be more. You know, common sense says if we have a new expense like parking expense, that would be okay to use. In general, we use a lot of accounts payable in accounting because we don't deal in cash. We get a bill, we pay it later. Notes payable has to have a set payment date, and it's usually longer than a month, and it usually has interest. And then the unearned revenue account is where the customer prepays us. So we debit cash and we credit unearned revenue because it's a liability, because we owe the customer service in the future. Maybe it's a prepayment to the Mariners for a ticket. Well, the game is in the future. They haven't provided the game yet. And then we're going to learn in chapter 4 how they recognize the revenue after they've played the game. Okay. So really understanding the rules of debit and credit. And then I go through, let's see, I just want to run through these because they're a little different. These were some practice ones. And then we did the full set for the company. All right. Okay, here we go. We had Emerald City graphic designers and stockholders investment, debit cash, credit common stock. Company prepaid rent and cash. Prepaid rent, an asset increases and cash decreases with a credit. Why is prepaid rent an asset? Because it has future value. It's prepaid. If we place, and here's the tricky part, is not everything is as a journal entry. So if we place an order for something, but it hasn't shipped and it hasn't certainly been paid for, that's just an order. So there's no entry. But if you purchase something, so a lot of what we're learning in this chapter is some language. So if you purchase something, we have to book a transaction. And then the question is, did we buy it on credit? Are we going to pay the bill later? Or did we pay cash? And it's saying here, we put $2,000 down in cash and the balance will be paid next month. So that means we got the full value of the equipment as an asset here. We reduced cash and we have to recognize that we owe $3,600 worth of money. Now that same thing, we had ordered these art supplies. Now we've purchased them, okay? But we did it on credit. So be mindful of that. You gotta read the whole prompt when you see this. Because if you said, and paid for it, that means cash was involved. But we bought it on credit, so it's debit supplies, credit cash. And took out a loan. Now this one always, on the day you took out a loan, you just say debit cash, cash went up, we borrowed the money, and we credited note payable because they told us it was a note. So read the directions carefully. The only way you know it's a note is if the problem tells you they signed a note. They took out a note. Then you'll use note payable. Otherwise, it's going to be accounts payable. Okay. Now, you don't need to worry about this interest rate because no time has passed. And interest is a function of time. So we're going to leave that there for now. And in chapter 4, we're going to deal with that. Okay. Now they made a partial payment. There's that word pay again. So cash goes down with a credit, $800, and we're going to reduce accounts payable with a debit. So we owed $1,500, and now we only owe $700. Okay, we create an advertisement. Finally, we're doing getting some revenue. We create an advertisement. It runs in the newspaper and the company is paid $1,300. Debit cash, cash goes up with a debit and we recognize service revenue. All right, here we go. Now we have a customer who pays us in advance for work. Why would any customer pay in advance? Because they're a new customer and they don't have their credit established with us yet. Okay, so cash goes up, debit, and unearned revenue also goes up with a credit. All right. We create and deliver an advertising poster to Genki Sushi. $4,700 is billed but not paid. So debit accounts receivable, not cash. They haven't paid us yet, and recognize service revenue. And we pay our administrative assistant, salary, wage, expense. That's an expense, and credit cash. We don't really pay our employees in cash, but that's, I wanted to put that journal entry in. And second to last one, we get a telephone bill. We haven't paid it, but the service was provided in January and it's now the end of the month. So we owe the money. We have incurred the service. We have used the service. So here we go, telephone expense, and accounts payable, not cash, because we haven't paid the bill yet. We want to recognize that we owe the money. And here we go. We're going to pay a dividend, debit dividend, and credit cash. Cash goes down. Okay. All right. And then this is basically what Monopoly is all about, except you're buying land and you're paying rent expense and you're passing go and recognizing go revenue. And see how I've got the number beside, the transaction number beside all of these. Okay. We've got another page here. And then if it's more than one entry, I want you to run a total on your Monopoly. And then you create a T account. I'm sorry, you create a trial balance. And I've got extra lines here. You don't need to actually write an account title unless there's a balance. Okay. So here we go, cash, accounts receivable, and see here, these items here, these accounts here, they could just be left off the trial balance. They're only on the trial balance if they have an ending balance. Add up all the debits, add up all the credits, and they balance. Okay. And that's it. Okay. So really so when we talk about the rules of debit and credit, it's really coming down to so debits increase assets. There's an equal sign here. There's an accounting equation here. These guys are on the right side of the equation. The word right has an R in it. Credits have an R in it. So credits increase liabilities. Credits increase stockholders' equity, retained earnings, and common stock. And credits increase revenue. Now, expenses and dividends are also on the right side of the equation, but they have a minus sign in front of them. So they're the opposite. So you debit to increase expenses and debit to increase dividends. Okay. So you're just learning these journal entries, and it's about 13 and T accounts and creating a trial balance and statements. And that Monopoly assignment is hopefully will bring it all together for you and put you in a good spot for the quiz Friday night for chapter 3 and the exam next week. So a couple things to be mindful of. Just work on that Monopoly, start thinking about the company analysis project. It would be a good time to reach out to your teams and make a Zoom meeting, maybe Wednesday, Tuesday of this next week, possibly Friday, but you want to be a week from now. You want to be mindful of making sure everybody has enough time to study for the exam. But a good time to meet would be next Tuesday at 4 o'clock after the review session, if your team members can meet. And really agreeing on when you guys can meet is super important. Go ahead, Daniel.
Oh, I just had a quick question about the trial balance sheet. So when you're listing the expenses, is there a certain order that they need to go in?
Are you talking about Monopoly or
Well, just so on the homework on question 10, the final question, we listed the trial, or we filled out the trial balance sheet, and when listing the expenses, it didn't seem like there was an exact order to it on the homework.
So
It
the
was
order of the trial. So if you're looking at Monopoly, let me skip over to Monopoly. You
okay.
get a chart of accounts. Okay. And the chart of accounts is in the order of the trial balance. Or rather, let me say it a different way. The trial balance must follow the order of the chart of accounts. So cash, AR, supplies, prepaid rent, insurance, equipment, accumulated depreciation, those are all assets. And this order is what you should follow for the assets. And then we get to the current liabilities. We don't have any long-term liabilities in this trial balance, but they would be next. And then common stock, retained earnings, dividends, and then first revenue, and then just list the expenses in the same order you got them.
Okay.
Okay. If you work for a company and if you are doing statements for a company, they're going to have their preferred order for expenses. So for example, at Bellevue College, we have salary at the top of our expenses, because we don't produce a product, but we have a lot of people working here. So it's our biggest expense. So it just depends on where you work, what they want to put the order on.
Okay, that makes sense. Thank you.
You bet. Any other questions? But order is a big deal, and students often get the order wrong. And it's like, you had the chart of accounts, just follow that for Monopoly. So super easy. Debbie or Yi, do you have questions?
No, thank you.
All right, you always ask me good questions on email, so but let's go back and look at your the last question on the homework. Let's see. So journalize the transactions, post to T accounts, make a trial balance. Okay, so you start with the journal entries, and then you just build everything from there. So that's a good question. That's a really good homework question for preparing you for Monopoly. All right. Well, I'm going to stop the recording.